The topic for today is timing decisions for the short term. Short-term timing decisions in the stock market are very complex. Due to its complexity, people tend to ask, is there a silver bullet? Yes, of course. And the silver bullet is very simple: insider information. If you are an insider of the company and you know the orders for the coming months, then of course you know how the company will perform. But as a member of the public, you and me, we don't have this kind of information. And there are only a few insiders around, and they won't share the information with you. So in that case, short of this silver bullet, what we can do is that we observe and try to discover and try to understand the rhythm of each stock movement. The purpose of playing the short term is to take advantage of the up and down cycles during the day, the week, or the month. And the goal is to make small net gains. That means we may lose small sometimes, but we will win small many more times, and we add up the net gains for the year to make a good profit. In this way, we don't have to tie up the cash for a long time, because we go in and out of the market. We can recover the cash and we can play again and again. But I don't advise that you follow the stock market full time. All you need is just about an hour to follow the market and try to observe, and then you place limit orders online. The first question you need to ask is, can the company survive? So survival is very important. And you have to understand that this company, the company that you're interested in, is not a potential bankruptcy. How do you know? Well, you look at their cash reserves and the profits they make for the last few years. And what you need to do is that you have to follow the stock movement for a while, and then pretty soon you have some idea about the target price that you want to buy or sell. And you have to be patient, because the price may not cross your target level, but all you need is to wait for the next opportunity to come by. Environment. There are a lot of economic signals in the stock market that you have to understand. Without that knowledge, you'll make the wrong decision. And right now, as the year 2009 begins, the environment is very toxic, because we are in the midst of a worldwide recession. And if that is the case, all the stocks, most of the stocks, will be on their downtrend. And downtrends have their own rhythms. You have to observe the stocks that you like and see if you can discover some rhythm. And when the situation improves down the road, maybe later this year or next year, then there will be an uptrend rhythm too, which is just the opposite of the downtrend rhythm right now. If you want to play the up and down movements within the day, the following are my observations. There are many stocks that varies within the day. The range is about $1. And this is a good range for you to play. In my video number 17, I have mentioned some of those stocks, and you can discover more if you pay attention. And with luck, if you can catch half of this price range, you can make a decent profit out of it every day. Another observation I have is that in the New York Stock Exchange, within the first 2 hours after the opening bell, many stocks have registered their highest or lowest price. Sometimes they even register both. So for the rest of the day, they just move within those limits. So this will be a good reference for you to play if you're interested in daily trading. However, you have to understand that these limits set during the early hours of the day may be broken if there are unexpected news. There is something called the consolidation period. It is a very brief temporary period, may last for just 1 or 2 days, and it applies for both the up and down cycles. It doesn't reflect a change of trend. In this case, if the price is on a downward trend, the consolidation cycle means that the price will move up in the opposite direction for a little while, and then the stock will continue its downward trend. So the same is true for an upward trend. The price will move down a little while before it continues to move up again. So in this case, you have to tailor your price targets accordingly. However, consolidation cycles sometimes may turn into a bottom or a top for the stock, but you don't know it until you see it. The next thing I'd like to mention is ex-dividend date. Ex-dividend date means that you, in order to claim the dividend for that company, you have to register it on that date. That means you have to buy 1 day beforehand. So because the day previous to the dividend date is the last day, there are a lot of funds or people rushing into buying the stock. As a result, usually the price goes up, and after that, on the next day, usually it will come back down the day after. So you have to pay attention to that. And here are some of the companies that pay very high dividends: Verizon, Altria Group, General Electric, and Merck. Quarterly report. You have to understand that the days leading to the report release is much more important than the date of the release. Why? Well, insider information again, because the insiders of the company already know what has been happening in the company. So if the report is not a good one, they will try to push up the price so that they will be able to sell when the report is released. For instance, if the price goes up leading to the release date, you can be sure that the release date will trigger a fall of the price, and vice versa. News and analysis. You must understand that 90% of the news and analysis that you read or hear are outdated or irrelevant. It's a pretty dismal situation. As a member of the public, we have no inside information, so we have to follow. The only thing we have is that we can observe and make objective judgment about the stock movements.